structure is really important when it comes to your life as a trader. So right now we're going to just take a look at some of the things like why most traders read the trend and how to fix it. So if you look at this is God, this is God, this is God. So this structure that you are seeing right now, this is dominating market structure. This is dominating market structure. Right? So let us get into some details. So when we are talking about market structure can be into one of these three. The first one is define the market structure in consolidation, or second one is uptrend, and the third one is downtrend. So you can either find the market in uptrend or downtrend or consolidation. So it depends where the market is, but the market is either being consolidation, uptrend, or downtrend. Okay, so today we are going to just take a look at four of the three in nutshell. Then as time goes on, we are going to take a look at these structures in details. So we are going to start with before we get to talk about consolidation, we are going to just what that is uptrend and downtrend. So we are going to start with uptrend, then we'll talk about downtrend. We start with uptrend, uptrend, uptrend. Okay. So what do we mean when we are saying that okay, the market is in an uptrend? What do we mean? Okay. So this is something that I need each and every one of us to observe. So when the market is moving in an uptrend, it means that the market is breaking a higher high. Okay, the market is breaking higher high. So this is the way the market is going to be moving in an uptrend. So the market will move like this. Yeah, it will give us a pullback. So what we are going to see is the market will first of all give us a push to the upside, and it is going to give us a pullback to the downside. After doing that, again, the market is going to give us a push to the upside, and after closing above this area, again, the market will give us a pullback. Okay? After giving us a pullback, again, the market is going to give us a push to the upside. After giving us a push to the upside, the market will also do the same. It will give us a pullback. After giving us a pullback, the market will give us another push. After giving us another push, the market is going to give us another pullback. After that, the market will give us another push. Then it will give us a pullback. So what is the market doing? The market is breaking the higher high. The market is breaking the higher high. So when the market is in an uptrend, it is creating higher highs and higher lows. Okay, this is what the market is doing. So when the market is in an uptrend, we are expecting the higher high to be weak. Okay, and we are expecting the higher low to be what? To be strong. We are expecting this one to be strong. So for the higher high to be broken, it has to be weak. For a higher low to give us a breakout, it has to be strong. So when the market is in an uptrend, it is going to be breaking the higher high. Okay, breaking the higher high. Okay, breaking the higher high. Okay. So this is what I want to explain on the same structure which we are writing. When the market is moving like this, giving us this and okay, this push, this is a pullback. So the market will always give you a push before it gives you a pullback. It will push and give you a pullback. So it has to break the higher high. Okay. So for the market to break the higher high, it needs to be so strong at this point that it is able to break this point. If this point is the low of the market, this point, if it is weak, the market will not be able to break here. And what will happen is the market going to give us a pullback. Again, break this part, which means we will now have to wait for a strong low for the market to be able to give us a break or this fraction. Okay. So there is something that you have to understand about the market, which makes a lot of people not to be able to see where the market is going and how the market is moving. So I'm going to talk about that right now. So we are talking about what makes a lot of people not to be able to see when the market is likely to give us a push to the upside. They get so caught up. So we say when the market is in an uptrend, it is breaking the higher highs. Okay, it gives us a push, a pullback, and a breakout, and a pullback. So how can we know that at this point the market is about to go up? How can we know? So there is something that the market is supposed to do for it to show you that at this particular time I am now about to go up, or I'm about to continue with the direction that I'm going to. So what you need to see when the market is giving you a pullback, the market has to give you a structure like this one. Like that. So it has to give you a structure. It has to give you a structure like this one. Okay, something like this. This is what you need to see when the market reaches a certain point. So you have to see this whole structure here that I'm talking about. So before you see the market giving you this structure, do not think of buying so that the target is higher high. It's higher high. Okay? You have to wait for the market to give you this structure. When the market gives you this structure, that is when we can now say, okay, now we can think of buying, targeting these higher high. If the market does not give you this type of structure, do not think of entering because the market is still keeping liquidity. It's still taking out some loans. Okay, so let us now go to this chart so that we can at least see something on the chart so that you have a better understanding of what I am talking about. So we say when the market is in an uptrend, the market is always breaking the higher high. The market is breaking the higher high. Okay. So let's do this. Let me look for something which is not too advanced so that you be able to understand in a clear way. I will not have to just use that much. Yeah. So when you look at this pattern, when you look at this pattern, this is how the market was moving. Okay? This is how the market was moving. This this is how the market was moving. I need you to pay attention to this. So you need to pay attention to this because this is so important. So when you look at this is what you are going to observe. The market has been moving from this point. It went up. When it reached this point, the market um, had to give us a higher high, give us a pullback. Okay. After giving us a pullback, the market had to continue moving upward. We had to wait for the market to give us a break of structure here. After giving us a break of structure, what happened? The market continued moving up and gave us another pullback. When the market gave us this pullback, we now had our higher high here. The market continued moving upward and it broke this higher high. After having this breakout of the higher high, the market gave us a pullback to the downside, giving us this higher high. So what are you seeing? The market is leaving these higher lows. This higher low is safe. It's strong. It gave us this breakout. This higher low is what is strong. It gave us the breakout of this higher high. This higher low, we expect this higher low to give us a breakout of this higher high. After this breakout, the market continues. Okay, it came to this level. So this one is a bit advanced. I don't want to talk about it because if you look at this structure, um we have here we can put a Fibonacci here from this point to this point, and you find out that this point was not in the 50 of the Fibonacci, which made this point to be liquidity. So after the market gave us this breakout of this point which was considered to be a higher high, this higher low was considered to be liquidity. So this is why when the market gave us a pullback here, it took out this and it had to give us um, a continuation of the market direction. So this is what happened. This is another day from which you are going to learn about liquidity, how you're supposed to actually use the Fibonacci. For now, let us just focus on the market structure. So it gave us a pullback. After giving us a pullback, it gave us a breakout, breaking this higher high. But even when you check, you find out that the market gave us this breakout where it did not continue to to push downside where the candlestick this consolidation was expected to be at the bottom, but the consolidation was not at the bottom. So that was also a sign of showing that the market will continue to push. We'll talk about this in some other videos. So now the market has this higher high, this higher high. So what are we expecting? We are expecting this higher low to be stronger than this higher high for the market to give us a break of structure of this higher high. So here the market is moving, it gave us a breakout of this higher high. So what are we expecting now? The market has now also giving us a breakout. So now we are waiting for a pullback. And the market has given us this pullback. So we are expecting the market here, this higher low, to be what? To be stronger than this higher high which was created here. So now the market has to break this higher high. It has to break it. So the higher high is okay. So the market gives us another pullback. And there's a criteria some people would mark this as a higher high. but there's something that I have to see inside here for me to consider a higher high. I have to see something like this. If the market does not give me something like this here, or here or any of these points, I'm not going to consider that as our a higher high, because for a higher high to be considered, I need first of all to make sure that the market has given me a liquidity. Then I will say, okay, now I can consider this point as my higher high. If it does not do that, then I'm not going to consider that point. Some people do not even consider that. They just look at the tip, how the market gives you a pullback, and they will consider that as a high high. But I don't do that. There are certain principles that I follow for me to have a higher high or a higher or a higher low. Okay, so now the market has broken this structure. What we know? So what we know now is that this higher low is stronger than this higher high. So we are actually expecting the market to continue to hold. The market gives us, keeps on pushing, and it gives us this new higher high. After giving us this new higher high, the market gives us a pullback, and we are expecting this higher low to hold for the market to continue pushing up. And what happens? The market here does not give us any breakout, but it gives us a breakout up to this point. So if you are trading, you do not consider this point as your higher high. No, you don't. This as your higher low. This point here, the furthest before the market gets a breakout, this is what you are going to be considering as your higher low. Okay? So the market gives us a breakout again, and we have this point as our higher high. Okay. So after this, what are we seeing now? We are If the market did not break this point using this structure, what are we going to consider to be our higher low? This one is going to be our higher low. After this, we have seen that the market has given us a breakout to make for us to have this higher low. After having this, the market gives us another breakout here. This one is now our higher low. So this one now is our higher high. So the moment the market gave us a breakout like this one and this one, we knew that right now we now have a pullback in the market. So now we are now looking at the lows, but let me not get into that now. We're just looking at the high high. So now you have an idea of this. Let me just try to also explain something else on this same topic of higher highs and higher lows. So there is something that I would like to explain, something which is so important, something which is very important. Um, so when the market is in an uptrend, when the market is in an uptrend, okay, um, so when the market is in an uptrend, when the market is in an uptrend, when the market is in an uptrend, it's moving like this. Okay, the only time that we are going to have this higher, this higher low, it is when the market gives us a breakout here. Okay, if the market does not give us a breakout here, we are not going to consider ourselves as this point as our higher low. Okay, so what a lot of people don't understand at times, you find out that the market is moving. Okay, and the moment they just see the market starting to move like this, okay, before the market can break this point, this higher, this higher high, they mark this point as their higher low. So what happens when the market now starts giving us a pullback? When the market starts giving us a pullback, and the market comes and takes out this point that you have marked as your higher low, what do you now say? You now say that the market is going in a downtrend. Okay? You have now confirmed that the market is in downtrend. Meanwhile, the market did not give you a breakout for you to consider this point as your a higher low. Okay? So once the market does something like this, you now start to prepare to sell. And what happens? The market traps you. You come at this point, you want to sell, you sell here, and the market keeps on moving upward and now giving us a real higher low, giving us a real higher low. So let me try to explain this again because this is so important. A lot of people normally miss it. A lot of people normally miss it. So if the market is moving, okay, it is moving within an uptrend, it keeps on moving just like this. Okay, it gives us a breakout there. After giving us a breakout here, okay, the market moves, keeps on pushing. And the market gives us a pullback, a pullback. Before the market gives us that breakout here, what happens? People, let's say, okay, right now the market has now given us the low here. So what will happen is that the market will give us a clear breakout here. We have our higher high, okay. A clear breakout here. We have our higher high, okay. Then before the market comes here and gives us a breakout, because people have seen how the market has put, they label this one as their higher low. Okay. So after labeling this as their higher low, what happens? The market starts to give us a pullback. It starts to give us a pullback. Okay? The market starts to give us a pullback and break this higher low which they have marked. Which they have marked. And what do they say? They say, okay, the market has changed its trend. We are now in a downtrend. After having this as their downtrend, they start now to sell. So whatever order book that they are going to have, whether they are order book here, that they are going to have, whether they are order book, they are supply and demand, I don't know what they are going to be having here. They will start selling here. They will start selling here. Why? Because to them, this point which they had marked is their higher low. And forgetting that this is where our true higher low is. So forgetting that this is where our true higher low is. So for us to consider that the market is going to go downward, we have to wait for the market to give us a breakout here. It has to give us a breakout here. It should not give us a breakout of this one, of this take higher low. This one can just be in this one. We are only going to mark this one as our two higher low the moment the market gives us a breakout here. So what the market will do something like this, it will come like this, take out the liquidity at this bottom. Okay? Take out the liquidity. After taking out the liquidity, the market will now start to keep taking out any person who tries to sell here, they are out. They try to sell here, they are out. They try to sell here, they are out. They try to sell here, they are out. And once the market breaks our higher high here, what happens? What happens after the market gives us a breakout here? They now say, okay, we are now in an uptrend. And what do they start doing on this particular time? They now start buying. Okay? They now start buying in these areas. And as soon as they start buying, what happens? Because the market has now kept liquidity, which was here, now has to start giving us a pullback. And the market starts taking them out, taking them out, taking them out. Okay. So this is how the market is. This is how you read the structure. Do not consider this point as your too higher low before the market is a breakout of this higher high. The market has to first of all break this higher high and this to have your higher low. If the market does not break this higher high, you are not going to have your higher low. So your higher low is as a result of the breaking of this higher high. Okay, let me explain this for the last time so that you have an understanding of this, because this is very important. If you don't have full understanding of this, it will be very difficult for you to understand certain things that we are moving, because everything that you are going to get, it is depending on market structure. So I say, when the market is in an uptrend, it's going up, okay, and it gives you a pullback before the market breaks its higher high. This point here, this point here, even if it creates like this is not going to be a confirmed, okay? It is not going to be a confirmed. It is not going to be a confirmed higher low, okay? It is not up until the market gives you a breakout here. Once it gives you a breakout here, that's when you can match this higher low. So why is it so important to understand this? Because you are going to be using this when it comes to Fibonacci. Okay? So if you don't understand where your true higher low is, which means even when you are dealing with the Fibonacci, you have to set 50% or point of increase of your Fibonacci. You see? So once you know how to properly count in, how to normally identify your higher lows, it will be so easy for you to use the Fibonacci. You see? So if the market does not give us a break of this higher high, we are not going to have our higher low. Okay, let's get to the chart so that at least we can have an understanding of what we are actually talking about. So uh so that we can have an understanding of what we are talking about. Okay. So this is the structure, okay? This is the gold structure. Gold structure. Okay. So what are you seeing right now on this chart? So what you are seeing right now in the market structure, okay? This is the market structure that you are seeing right now. Okay? And what is it that is saying? The market can move, okay? Can move, set some liquidity, give us its pullback, it can move, give us the liquidity, give us the breakout. So this point can never be considered as our higher low. For as long as the market has not given us a breakout of this higher high. Okay. For as long as the market has not given us the breakout of this higher high. So for us to say that we now have this higher low, we have to wait for the market to give us a close, like the way this candlestick closed above this point. Okay, once we have this close, we now know that this is our higher low. Okay, this is our higher low. So if the market keeps on moving just like this, and you find out that the market gives a rejection like this one, what would happen? The market can still come here and keep this. It becomes liquidity. It keeps this and the market continues to go up. You see? So you have to make sure that you only mark this point the moment the market gives you a breakout here. If the market if the market does not give you a breakout at this point, you don't mark this you don't mark this point. Okay. So let's continue to move. So we have our higher high here. We have our higher high here. We have our higher high. Okay. We have our higher high. We have our higher high. The market gives us a breakout here. Once we have that, what we now have? We now have we now have our we now have our higher low right here. That is what we know. The market keeps on pushing and it gives us a pullback again. So since the market has given us a pullback here, what we have this higher high. And for us to confirm this low, what do you need? You need the market to give us a breakout. If the market does not give us a breakout here, we are not going to consider it as our higher low. So what are we seeing right now? Okay, this is what we are seeing. So the market moves from this point and gives us a breakout. It will now mark this as our higher low. The moment the market again gives us a breakout here, we mark this area as our higher low. So the market keeps on moving. So this is our higher low and this is our higher. The market keeps on moving. What do we have to do? We have to wait for the market to give us a breakout here. A breakout here. The moment we have this breakout, what do we need to mark? We need to mark this trade. We need to mark this trade. So what did the market give us after marking this area? The market gave us a higher low. If the market does not give us this breakout, we're not going to profit. If the market does not give us this breakout, we're not going to profit. If the market does not give us this breakout, we're not going to profit. So we continue moving, continue moving. Okay? So there is something that I have explained earlier here. There is a certain way in which we have to read the market in terms of honesty and getting to understand why it is that even after breaking the market still has to come and take out this. So we have the market breaking this higher. The market gave us this break out. What we now have? We now have our own we now have our higher low. And what happens here? What happens is I was explaining something. If the market was going to go down after giving it 50, we were supposed to see this consolidation of your it was supposed to be somewhere below somewhere. That's the end of it. The market is now about to go down. But what did the market do? The moment the market gave us this liquidity, the market gave us a pullback. Okay, showing us that the market is not going to the downside. If the market had to close, if the market had to close here, because there are certain things to close, and if the market here where we are, if we had seen a tendency closing in this zone, tendency closing in this zone, if the tendency had to close in this zone, inside this zone or above this zone, we would have known to see our things. So many of some traders, you find them being caught in this because the moment they see this breakout, they have already confirmed that the market is going down. Meanwhile, the market was always sitting in liquidity for it to give us this big move. Okay? So hope you have understood why the market is not go down even after coming here, breaking this higher low. It is because of It is because of system reason. So you have to understand that as we keep on going out, I'll be making some videos on breakout why the market, even after breaking up certain points, you find out that the market is not moving to the direction where it has given you a breakout. So we now have another higher high when the market gave us this pullback. We now have we now have another we now have another higher high. So for us to mark this point, what we need the market to give us a breakout view. Once the market gives us a breakout view, we are now going to say that this is where our higher low is. Once we have this higher low, we'll have it as a result of the market giving. And the market continues pushing upward. We need the market to give us a break for us to have this point as our higher. So what happens now? As you can see, the higher lows are strong here, the higher lows strong here, the higher lows strong here, the higher lows strong here, the liquidity goes, it goes the place, it goes the market. We don't break it to continue moving downward. And we have seen now, we have this breakout, we mark this as our higher low. Yeah. So there is another problem that some people have when it comes to the market structure. It is going upward. When the market gives you a breakout like this one, they mark this point as their higher low. They mark this point as their higher low. You do not mark this point as your higher low. When you are marking the chart, you have to make sure that you look for the lowest point. So what you can be doing is you are having some challenge when it comes to finding the higher low. You can also be just come on the chart. You mark this point from your higher low to the point where the market is. Then you ask yourself, inside this low, which point is the lowest? And you find out that this is your lowest point. So this point becomes our higher low. I'll explain it as we are going so that you get a better understanding of it. Okay. So as we are moving, the market is a breakout here. Another breakout here. Right, another breakout here. So when the market is giving us this breakout, what we need to do? So what we need to do is we get the rectangle tool and we come here to the point where the market gave us a breakout. We mark to the bottom here. So where is the lowest point? This is our lowest point. So this point becomes our higher low. Okay, this point becomes our higher low. Let's continue. We are not going to mark this structure. We are not going to mark this structure, but we're going to come with this one. You can still mark it. Okay, for the sake of marking, we need to mark it first, just get an understanding. So what will happen here is we have like a higher high here. Okay, but this is not a verified higher high. Okay, I'm showing you how to mark it. So just get this one, your rectangle to come here and mark to the center of the picture, breakout of structure. Then you come here. This lowest point is in this 4 point. This is your higher low. This is your higher low. So we continue to this point. What happens? What happens? We now have another break of structure here. Okay, the market has given you a break of structure here. It has closed above. It has closed above. Okay, so what you have to do now? What you have to do is very simple now. You just have to set this rectangle to and come here and map to the point where the market gets to the breakout. Okay, After making this point at the bottom, this one at the bottom, this is your higher low. Okay, this is your higher low. This is your higher. So you don't mark this point or this point as your higher low. No, you mark this point as your higher low. For the market itself, you best of have to wait for this point. Okay, so the market gives us another push. So this is going to be a very good example. So what do you now have? We have this point. This is the point that we have here. This is the point that we have here. Okay. So this point is we have here, for us to have our higher high, what did our higher low, what did I say? I say you have to get to rectangle two. Okay, you get to rectangle two. When you get to rectangle two, you have to mark it till the candle because here is the breakout, this is the candle. And you have to pull to the bottom. Okay? You have to pull it to the bottom. So what do we now have to do? What do you as you can see, this is the lowest point. So for you to mark your higher high, you are not going to use this point. You're not going to use this point. So some people would mark this point as their higher high and as their higher low. And if you mark this as your higher low, what happens? The market breaks and still continues comes to break this point, which is your higher high. Okay, so you mark this last point, you come to the point where you are having your higher high. Then you go over to the candlestick that gave you the breakout. Once you mark that within this whole area, okay, this whole area, you have to check, you have to check for the lowest point. Once you have that lowest point, what does it mean? It means that you have now found your higher low. And that's how you read the market when it comes to the higher high and the higher low. Okay, if you have any question, you don't understand something and you want me to explain more about it, you can just comment in the comment section so that I can at least do something over that. Yeah, so now we have this point as well. We have this point, it now becomes our higher high. So what do we need right now for us to know our higher low? We need to mark this with this candlestick here, which gives us the breakout and come to the bottom. Okay. When I'm analyzing the market, I don't even have to draw this rectangle. I'm just showing you so that you get to know how it can be easy for you to see how to mark your higher and your higher. So you now have to make sure that you now do this. After making this, what do you now do? So you now have this information. Okay. You now have this information. You you now have this information that this is your higher high. Okay. And this one, this candlestick, the moment it gave us a breakout, what do we have? This is our lowest point. So this one becomes our higher low. Okay, it becomes our higher low. So that's how you mark. That's how you mark. You are done. We are not looking at the market structure right now, checking the inside here. I know I touched about that a little bit, but we are not doing that. We are not doing that at this particular time. No, we are just going to be looking at the market structure now. We'll do that some other time. Okay, so what do we now have? Now we have this. The market had touched here, this, this, this higher low. What did I say when I said that the market just came to hit liquidity was showing you that other example. I say it this way. Okay. I think after the market gives you a breakout or a speed, what the market will normally do is it will have the consolidation where the above the point where the market has to give you a ticket. So you see the market gave us this consolidation here after hitting this higher low, after hitting the liquidity equals at the bottom. Okay? After giving us this liquidity, after giving us this liquidity equals the liquidity. You see what I'm talking about? After the market gave us the liquidity here, the market gave us the liquidity here. It gave us the liquidity here. After the market gave us this liquidity, what do we now see? We now see the market giving us this coming in, giving us this consolidation. Okay. So if this market was about to go down, okay, we expected this consolidation at the bottom to be down. The market will start giving us consolidation at the bottom. That's how the market works. If the consolidation is not below, which means the market is still pushing upward. Okay, still pushing upward. So now we have our new higher high. Let's go back to the analysis we are having here. Okay, so what do we now have? We now have this higher high of ours. This high of ours. So what do we now have? What do we now have? Okay. So when you look at this market structure, what are you going to observe right now? What you are going to observe is that the market did not give us a breakout. Um, okay. What are you saying now? Okay. So this point remains, okay, remains our value higher low. So this point here, this point which you are seeing at this particular time, this one, this higher low, which you are seeing here, this is the higher low which remains to be a valid higher low. Okay? So I say something here. If the market was going to continue going down, it was supposed to give us a break of structure. After giving us break of structure, it has to start doing its own consolidation below this higher low. So what did the market do now? After the market gave us this breakout, how many candlesticks closed above? I talked about it. I said we have to see the candlestick breaking below the candlestick which gave us the breakout. I'll talk more into details about this once we once you have an understanding of the market structure properly. You see the market had to give us some close down here. Okay. And then what are you observing as well? You're also observing that after this, what we have, the market gave us a breakout, and after giving us a breakout, the market is giving us some consolidation. Okay, some consolidation below this point. Okay, if you look at even where our consolidation was, you find out that it is where our consolidation was. You see this point. When you look at all these consolidations which will happen, what does it tell you? It tells you this information the market is telling you to say what you are seeing right now, we are about to go down. Okay, so this whole information that you are seeing here, right here, that's the market trying to tell you that we are about to go down. We have given the breakout. We are now about to go down. You see? So this is what you are seeing of okay. So when we are talking about an uptrend, we go back to our topic and we are talking about an uptrend, we are talking about the market breaking the higher high. Okay. So now we have this higher high. Okay, we have this higher high. What happened? The market did not close above this higher high. Okay, so we cannot consider this point. This is what I was trying to say. We cannot consider this point to be our higher low. Why? Because we need a candlestick to close above this. Okay, above this. It has to close above. If it does not close above, then there is no breakout. Even here, if you look at it, this candlestick here, it did not close below the higher low. So we cannot even consider it as a breakout. It will only be considered as a liquidity. Why? Because the candlestick did not close below. And when you look at this candlestick now, you find out that it is different. Okay? When you look at this candlestick, you find out that it is different. This candlestick closed below this valid higher low. This is our valid higher low. This one. It is our valid one. This one. Okay? This is not our valid higher low. We are still considering this one. So this one can only be considered if we have a breakout here. So if the market failed to give us a breakout using this one, if we have this, it shows that this point is weak. So the market is likely to give us a breakout here. Okay, so if the market gave us a breakout here, we would have known that the market is now strong, is going strong. Okay, but it failed to give us a breakout here. This is the reason why this one is considered to be a weak point. It is considered to be a weak structure. So we have talked about the third part of our lesson. We have talked about this. This is the market structure where we're just talking about the uptrend. So in the coming lesson, we are going to talk about the downtrend. We are going to talk about the downtrend. Okay, so today it's better we just learn one thing at a time so that you have a better understanding. Okay, so that you have a better understanding. So today we're looking at so that you have a better understanding. So today we're looking at an uptrend. We are done with this. Okay. So tomorrow we are going to be looking at the downtrend. So it could be the same time. I'm going to be live. I'll be talking about this downtrend. This is what I'll be talking about, the downtrend. Okay, so join me tomorrow so that we can get to know more about the downtrend. So we say when the market is an uptrend, it is breaking the higher high. Okay, it is breaking the higher high. And we are expecting the higher high to be weak and the higher low to be strong. Okay, and each higher low cannot be contained if the market doesn't give us a break of the higher high. So thank you very much for the time that you have been here. As we continue to learn more about market structure, as we continue to learn more about the market, please let us continue to backdate whatever that you have learned. A lot of people have the problem of not backdating what they have learned. They want to go and try those things in the real market. Don't do that. You should go and backdate when you are done backdating, then you can go in the right market and do whatever that you are going to be doing. Thank you very much for the time that you had in whatever that you are doing. See you next time. Yep, yep.